Moving on to markets now, and according to the latest crop progress report from the USDA, Nebraska's corn crop is rated 84% good to excellent. That's 12 points better than the nation's corn crop as a whole. In soybeans, Nebraska producers planted 98% of the crop with early condition ratings at 86% good to excellent. But top of mind for farmers is how persisting drought, there's that word again, and how those conditions will impact crops in the coming weeks. I spoke with DTN's Todd Hultman on Wednesday to get a closer look at the numbers and what he's watching moving forward.
Well, this was the first week we had crop ratings for both corn and soybeans. And, my only hesitation on these crop ratings is that they're still so early in the year. In a lot of the places, the plants are still very young. There's not a lot to assess. So I think we're just getting kind of a general appearance type rating, and in that regard, both corn and soybeans are doing well. A look a little farther down on the crop progress report, and the numbers I'm most interested now this time of year are the topsoil and subsoil moisture levels, and those are what have me concerned about the year ahead because we've got a very dry northern and western corn belt shaping up early this year.
And glad you mentioned drought. We're going to talk all about that in a minute. First off, though, wanted to talk to you about wheat because you have written a lot about wheat for DTN lately. What have you been following in that market?
Well, there's a couple things going on. Of course, we have the winter wheat crop being just starting harvest in Texas, and we're going to be getting into fuller swing here not too long. That crop's actually done pretty well. We've had some beneficial rains the past month, and the crop ratings come up a bit. The other wheat market that's gotten the most attention lately is the spring wheat crop grown in the northern plains, and that's where we have very extreme to exceptional drought conditions. We just got a little bit of beneficial rain here yesterday in the western Dakotas. I say yesterday meaning Tuesday of this week, and that might help out a little bit, but we still have a pretty dire situation when it comes to the moisture levels that crop needs to really fully develop.
Yeah, what are some of the marketing opportunities in wheat right now that you can recommend with all this being said?
Yeah, Troy, wheat is a difficult crop to market, and a lot of producers have told me, they've given me their stories about, wow, we had this great wheat crop, we were just a week away from harvest, and then we got hit by hail or some strong windstorm or something and lost a lot of our crop. And so we're very reluctant to make forward sale recommendations when it comes to wheat. It's hard to go more than, say, 25%, and we've done that in the case of winter wheat. In the case of spring wheat, when you're sitting in a drought situation, it's almost impossible to want to make forward sales because you don't want to obligate yourself to production that you might not have in the year. So it's very tough to do anything early, and it's just a matter usually of having a little patience after harvest, trying to get a better pricing opportunity, and that usually happens in the winter following the season, to be honest.
When we look at corn, what has been moving the market there this week? Is it still all about the weather?
Yes and no. It's primarily about weather and the dry conditions that I mentioned in the western and northern corn belt. But we also have a very strong demand situation in corn. We had in late April, early May, a very strong surge of bullish commercial demand for cash corn, and that's backed off a bit. I think some of the demand needs have been satisfied. But overall, Troy, the demand clues continue to remain very strong. We're seeing very strong bull spreads in the July-September spread months, which indicate strong commercial demand. We're also seeing the corn basis stay very strong this year. Our DTN National Corn Index is about 11 cents above the futures price on the board, and that's just something that we haven't seen for about 8 years. So it's a very strong combination of tighter corn supplies than usual and very active demand.
And speaking of tight supplies, how concerned should we be about drought taking down those soybean numbers even more?
Big time. I just don't think the market is fully recognizing the risk in new crop soybeans yet. And to put this in perspective, right now, if everything goes well, we're hoping to get maybe a 4.4, 4.5 billion bushel crop in 2021. Well, considering the drought situation we have in the Dakotas, a lot of people might not think that the Dakotas are a real significant part of production, but last year they accounted for 10% of U.S. soybean production. We cannot sacrifice 10% of the crop this year. And by the way, the Dakotas aren't the only dry area. I have some very serious concerns about northern Iowa and southern Minnesota as well as the year progresses. But needless to say, we can't give up 400 or 500 million bushels of soybean production in the year ahead and expect to meet the demand that we have facing in front of us.
And let's end things today with a selling question. I've heard you talk before on the show about finding an inexpensive put to protect yourself against a disaster scenario. Is that still a good strategy in this market?
You know, it actually is a good strategy. You know, it might sound crazy given the fact that we're facing a possible drought situation in 2021, and we've got prices near their highest levels in 8 years. Now, one of the benefits of having higher prices this year is that you're going to have higher crop insurance levels of protection, roughly. Now, those can be tied also to yield, so it's a bit complicated there. But even with that, there are some very cheap put, or what I call cheap price insurance opportunities. So for instance, there's a December 420 corn put priced about 4 cents a bushel. There's an $11 soybean put for November priced about 2 cents a bushel. So those are not big, expensive outlays and can kind of give you a little peace of mind through a very volatile, potentially dangerous market situation this summer.